Tonight's webinar is going to be on trading while working. And I think this is an important thing to talk about. Generally what happens, it's been my experience, this is certainly the way I approached it, and most of my friends are the same way. Most of my trading friends are the same way, where we believe that, before I jump into this, let me just say that I am going to look at the charts, the live charts, but the first part of the webinar, the first half of the webinar, we'll talk about tonight's topic, which is trading and holding down a job and some of the issues that come up with this. So we'll talk about that in the first half, and then sort of in the second half, what I'd like to do is take a look at the charts and see what we have currently on the charts. So hopefully that makes sense to everybody, and that's okay with you. That sounds great. Okay. So normally what happens is that as a trader, especially if you're a trader who has a job and you have to go to work, maybe to an office or whatever, for most of your day, for nearly 5-6 days a week, what that means is that you're often thinking about trading. You're thinking about trading for a living. Now, this is interesting because it's one of those things where, grass is always greener on the other side. And one of the things that we've noticed, and I've noticed, is that the idea is that once I get out of my job and I can trade full time, then everything's going to be okay. And at the moment, things are not okay because I can't trade enough, because I can't devote the time that's needed to trading. And that's a very common idea. However, what I'm going to talk about tonight are reasons why that sort of thinking might not be the best way to approach it. And in fact, there are several advantages that traders have who have day jobs. So if you're a trader who also works a job and you're not trading full time, you have distinct advantages that if you ever do quit your job and go full time into trading, you need to really consider how you're going to get around some of these problems, because it's very tricky. So that's basically the background for tonight's topic. And then again, later on, we'll look at the live charts for sure, because I know everyone loves to do that. So we'll definitely do that. And I have lots on that are on right now. Lots of trades are on right now. So I'll look at those as well. Now, what I would like to do is, are there any traders here who trade lower time frame charts, like say the 5-minute chart? If there is somebody here that trades a 5-minute chart, Kangaroo does. Okay. Kangaroo, which pair do you think might be ready for a trade right now? Oh, Kangaroo trades the 1 minute. Okay, that's even better. And do you trade the euro or Van Backham trades the 15-minute chart? Kangaroo trades the red yen crosses. Okay. So like CAD yen maybe? Dollar crosses and yen crosses. Okay. Oh, CAD yen's doing the thing that I've been waiting for. Great. All right. This isn't to you know what? What I'll do is I'm going to go to the yen 1 minute chart. That's what I'm going to do. Okay. Now, this is what I'm going to do. I'm just going to say, all right, the yen is, let's say I'm a 1 minute chart trader, and the yen's come all the way down right now on the 1 minute chart to this area where I'd expect support. So I'm actually going to just take a buy right now, just on this. It's just a demo, right? So it doesn't really matter, but I'm going to buy right now. Okay? So that's been done. I bought it, and I'm going to take profit up here at this area. So I'm looking for about 10 pips on this one. Okay? Let me go ahead and, so this one is going to be modify order. And we're going to go ahead and put our, we're going to take profit at 110.14. Or sorry, 100.14. And I will put my stop loss down here at 99.90. How's that? Okay. Now, the only reason I'm doing this is because I want to get, so my stop loss is down here, and my take profit is basically up there. Okay? Now, we're going to forget that trade now on the end. We'll come back to it later, and you'll see why. But for right now, I think it's important just for us to forget the trade and get into tonight's topic. So, this is what normally happens, is that people who are working a job, they think, oh, things would be so much better if I quit my job and I traded full time. So the desire for full time trading, and it's very common, and the idea is that, well, my trading isn't going that well, but it will go a lot better once I go full time and I get out of my job and I don't have to spend so much time with my job. I think that may not be true. It may not be true. And here's why I'm going to say that. There are several reasons why I believe this to be possibly false for most traders. The first reason is because how many traders here who work a job, have a job, would trade a different time frame chart if you could be a full-time trader? So in other words, you would change your strategy if you were a full-time trader. Jesper says no. Jano says maybe. Pan on Fire says yes. Canoe says no. Anyone here who would probably change your time frame? In other words, maybe you trade the 4-hour charts, but if you went full-time, you might trade the weekly charts. Or maybe if you went full-time, you trade the 5-minute charts. Nick says yes. Kamikaze says yes. Okay, so it looks like there are more yeses than nos. Now, one of the reasons why I believe we have an advantage if we have a lot of stuff to do, and a job certainly qualifies as stuff to do, is because what that usually means, not always, but what it usually means is that we have to trade a higher time frame. So instead of trading the 5-minute charts, we decide that we will instead trade the daily charts. Or instead of trading the 1-minute charts, we decide we're going to trade the 4-hour chart. Usually, when you have a job, it pushes people into the higher time frames. Now, that's not always the case, because what will happen sometimes is we will find traders who actually say, okay, I'm going to go to my job, I'm going to work my job, and then, I wanted to make sure the mic was right. And then what's going to happen is I'm actually going to go home and trade for 5 hours. That's quite rare. It's possible for people who are maybe like students or things like that, or don't have full-time jobs. Maybe if you have a part-time job, you can do that. But otherwise, you're going to really grind yourself into the ground. And that's one of the pitfalls of traders who trade full-time is this. It's a very common one, too. Burnout. This happens all the time when traders are trading the lower time frames. Burnout is huge, huge, huge problem, right? Now, what happens when you're trading the higher time frames, and people don't talk about this, but it's true, is that you actually have a different part of your brain involved. So there's a different part of your brain involved when you're trading the higher time frames. So what do I mean by that? What is that? What's going on here? Well, yeah, Black Cat says, look, the more time you have for trading, the more you trade, which is not always a good thing. Absolutely, Black Cat. You got it. What will maybe happen to those traders who move from the higher time frame with the job to a lower time frame when you have lots of time is there's a lot of problems that creep up, and we're going to talk about those and how to tackle those, and even what to avoid if you do find yourself going from a higher time frame trader with a job to a lower time frame trader once you quit your job. So there's a lot of pitfalls here. So it's something to watch out for. A lot of hurdles to overcome. Now, when we're trading the higher time frame, the part of your brain that's involved when you're trading the higher time frame is the essentially, whenever you do something and when you're thinking about planning something, okay, and you do some planning. I don't want to get too technical into this, but basically, when you do the higher time frames, you're involved in planning. That's the part of your brain that's involved in higher time frame trading. When I say a higher time frame, I mean a trade that you put on the chart, you put in your profit target or your stop loss or whatever, and you walk away. You don't even have to put the profit target in, or, I would always put the stop loss in for me. But you could come back to it and manage it and say, okay, well, maybe I'm using a trailing exit or something like that, So the point is, when I'm using a higher time frame chart, like a weekly, daily, 4-hour chart, I put the trade in and I walk away. So that involves planning, right? And in fact, we can even look at some of the charts here and talk about this. Like on my CAD, here's my CAD yen chart. I've been planning a trade on the CAD yen for the last 3 days, basically. And the plan has been that if the market breaks through this 96 level and comes back down here and bounces and goes up, I'm going to buy. And so it needs to get above this little hump right here. So if today's daily candle closes above these highs over here, especially yesterday's high, which is the highest high, I'm pretty sure. Yeah, yesterday was 97.10. As long as it closes, like if this daily candle closes up like what it looks like right now, which it won't, but it's highly unlikely. But if it did close right now, that would be a nice buy trade for me, and I would buy, right? And I would shoot for this area up here. That's a planning trade, right? Totally different to trading the 1-minute charts. When you're planning, it's completely. Whoops, where's my notepad? Oh, there it is. I'm using the Euro daily chart as my notepad. So that's a totally different thing. What happens when you get into trading the lower time frames, when you're a scalper? Yeah. Very different, right? What happens with people who use the lower time frames is that you, when you're trading the lower time frames, you actually get to the area of your brain that you, let me write it up here so everyone sees it. But lower time frame trading, scalping, or lower time frame trading is completely different. And what involves in the scalping and lower time frame trading, does anyone know what part of their brain is involved? Any ideas? Fight or flight, says Pan on Fire. You become Neanderthal? Awesome. That's awesome. Reactive? Left? Yeah. It's the area that's involved in sex and drugs. So if you are trading the lower time frames, so let's just consider this for a second. When we trade the higher time frames, we learn patience, right? Which is great. It's a great trait to have as a trader. And our brain is involved in planning. The part of our brain involved in higher time frame trading is planning. Planning and executing, right? However, when we go to scalping, what happens is it becomes much more pleasure-oriented, and it's the same area of your brain that's related to sex and drugs. So basically addiction, right? So that's a very different thing. Here, you're planning something out just like you would plan out, a building or, a kitchen or building a redwood deck or something like that. Here, this is the same as getting a hit, right? If you're addicted to morphine or whatever. It's the same sort of thing that's going on in lower time frame trading. Doesn't mean you can't do it successfully. Doesn't mean you can't make a living doing it. It just means that it's close to what we would call addictive behavior. In fact, one of the better studies on this, and I don't want to get too technical into this, but one of the better studies of this, they looked at this, and what they found, actually, let me ask you guys, what is the reason why you trade? Why do you trade? What are you after? As a trader, what is it that you're after as a trader? What's your goal as a trader? Profit. Canoe says profit. Jesper says freedom. Pan says financial freedom. Black Cat wants to make money. Nick wants financial independence. Kamikaze says live in la vida loca. Minaj, hey Minaj, says earn a living. RSM says financial freedom. I want to leave my job, says Matt Pre. Okay, those are all completely reasonable things. Most people are going to say money or something around money. I want some freedom, and money gives us freedom, something along those lines. But what they found when they studied traders who use lower time frame trading strategies, what they found is that traders who trade and scalp with these lower time frames, they actually are not in it for the money. They're not in it for the money. The reason they're in it, and again, it relates to this area of the brain that's being activated, which is the reason they're in it is they're in it for the high that they get in the winning and the losing. Just like when you go and play a slot machine, or in Australia what they call a pokey machine, when you pull the arm on the pokey machine or hit the button on the slot machine, you don't know if you're going to win or lose. It's random, whether you win or whether you lose. It's highly addictive. The most addictive type of outcome is a random one. So if I throw an egg at the wall, every time the egg hits the wall, it's going to splatter, and I know it's going to splatter, and it's unlikely to do anything but bust up and crack on the wall when I throw an egg at it. But if I play a pokey machine or a slot machine, it's totally random whether I win or lose each time, and that's very addictive, and that's why people get into gambling problems. Well, it turns out the same thing is going on with trading. Traders who make a lot of money scalping often aren't doing it just for the money. They're doing it because it activates their brain, it's highly addictive, and they get addicted to that high, to that, winning and losing, not knowing what's going to happen, and then getting that win. That's what it's all about for them. So it's really different. It's a totally different, it's almost like a different sport when you're looking at trading higher time frames versus lower time frames. It's one of the reasons why I suggest that traders work their way down from a daily or weekly chart all the way down to, say, the 5-minute chart, if that's what they're interested in. It's so much easier to go down that way than to just jump in it straight ahead and start doing 5-minute chart trading. It's just highly unlikely. Manoj has a good point here. Manoj says, Walter, I've heard that when you're a trader when you don't feel any high or low, irrespective of whether a single trade wins or not. I totally agree with that. And it's one of the things that one of the first traders I ever worked with, I explained this to him. And I said, there will be a time when trading gets boring for you. And he said, oh, no, not me. No, never. I don't believe it. We'll see, whatever. And he ended up quitting his job. He worked at a bank. He quit his job and he went someplace really warm, a really warm place with lots of palm trees, warm water, nice beaches, clear water, and lives there. And he's lived there for years now. But he wrote me and he said, you were right. I did get to the point where trading became boring. So I agree with that statement, Manoj. And I think a lot of traders, we get stuck into the last trade and we make adjustments to our trading system based on what happened last time. That's not necessarily a good thing. We can always learn lessons from our losers. In fact, those are the best lessons. But it doesn't mean, to me, it's not that important that, we get hooked into whether or not the last trade was a winner or a loser, because it really should be considered, if we know we have a 70% win rate, then I'm going to get 3 losers out of 10. And so I don't know when they're going to come. They could all come in a row, but out of the next 10 trades, I know that only about 7 of them are going to win and about 3 of them are going to lose. So if I'm not attached to that next outcome, that's when you know that you're really on your way. So I would agree with that, Manoj. Yeah, he is. He is trading naked, Jeno. He's he's one of the first traders I ever met when I, went on the internet and started doing this stuff. I think he was actually the second trader I met. But it's not really about him. The idea here that we get bored with our trading is true. And so how do you go against that? Like, what do you do for that? Here's a good question we had earlier from Manoj says, do you think it's difficult to accumulate hours of screen time you need for educating yourself and backtesting if you have a job? I don't think so, Manoj. I think if I've been there, Manoj, if I had a job, and let's say that I spent a lot of time at the job, I would just set aside an hour or 2 here and there to do my backtesting to get my screen time. What Manoj is talking about, obviously, as many of you have heard, that most things in life, it doesn't really matter what it is, you need to get 10,000 hours, right? That's the rule. The 10,000 hour rule. And that means you become an expert. So if you have 10,000 hours of juggling, you're becoming an expert at juggling. 10,000 hours of race car driving, you're an expert at race car driving. 10,000 hours of trading, 10,000 experiences, so 10,000 trades. That's another way to look at it. 10,000 trades equals an expert. So how do we get to 10,000 trades? The easiest way is to go through a backtesting program like Forex Tester is the one I like, and getting all that under your belt. That's really the way to do it. You could sit through a bunch of trades through your life. The problem is, if you're trading live, you're going to run into losers, and it can be an expensive way to get that expertise. But in fact, Manoj, I would actually even say that it's more difficult to backtest for 6 hours at a go than it is to do 1 hour here, 90 minutes there, 2 hours there, another hour here, 45 minutes there. It's so much better, and you're more conscientious if you don't run into these long sessions of backtesting. So I would actually say that it's good to break it up. You'll probably end up being you'll get better experiences in the long run. Okay, so let's keep going here. So when we're trading the higher time frames, we involve our brain in planning, and when we do scalping and lower time frames, we're involved in the addiction area of the brain. So we light up the addiction area of our brain, which is the same area that gets lit up when we have sex or do drugs. And when we're planning a higher time frame chart trade, essentially it's the same as sort of planning to build a building or whatever, And remember, this random interval reinforcement, which is like a slot machine, that comes into play here. I mean, it comes into play for both, but it's very important with scalping because it's an immediate hit. You immediately hit your stop loss or you immediately hit your take profit, right? Okay. Okay, so let's keep going here. Now, so what do we know about having a job? Well, we know that if we have a job, we're probably going to be attracted to the higher time frames, which is a good thing. The other thing about using higher time frames in your trading is you're going to see something very, very important. When you trade higher time frames, you will begin to see the cycles. What do I mean by see the cycles? Well, here's a good thing to do. The next time you're looking at even it could be a daily chart or a 4-hour chart, even a 1-hour chart. This is possible. What you do is you take a screenshot of that candle, and you take 5 of them. So after 20% of the candle has gone through, so for example, on a 1-hour chart, you would take a screenshot and copy, hit the screenshot, print screen button on your computer, and you would take a screenshot of that candle 12 minutes in, 24 minutes in, 36, 48, and then, of course, at the end. So you'd have 5 screenshots, and what you would notice is that the candle would look totally different in each one. And so the beginning of the candle looks very different, like it might be red, and in the end it ends up being a big bullish candle, or vice versa. You can do this with a 4-hour candle or a daily candle or even a weekly candle. But the point is that there's a cycle, there's a natural rhythm to the markets, and you get to see these cycles when you're trading the higher time frames. Because when you get into a trade, you go, oh, it looks really good, and then you think, oh my gosh, it looks terrible. What's going on here? And then later on, it comes good again. And I'll show you some of the trades that I've been taking lately so you can see some of what's going on here. But the basic idea here is that there is this ebb and flow to the market. It doesn't matter if the market's going up, if it's going down, or if it's going up and down. When the market's doing this, it's always going through one phase followed by another. Let me show you on the 1-hour chart here on our euro, okay? Here's the euro chart, and you can see what's happening is the euro's going up, and you get these strong moves up, then little moves down, strong move up, little move down, strong move up, little move down, strong move up, little move down. Kind of now it's sort of like weak move up, weak move down, sort of choppy in here. Then we get another strong move up, weak, strong, okay? So what are we in right now? Well, we're in the down cycle. We're in the weak retracement move down here, and maybe we're going to get another strong move up. But this is what happens in the markets all the time. It doesn't matter if you're looking at an uptrend or a downtrend. These cycles happen all the time, and you will much more easily see them when you're looking at the long-term charts, because you will see a candle completely change from open to close, and what looked like a terrible candle ended up being a really nice-looking candle. That's because there's a cycle in the market. And that up cycle and down cycle, they're tugging at each other, and then finally the candle prints. So even today on the euro, right now, if you look at what happened earlier in the day, here, let me show you. If we look at what happened earlier in the day, the euro went down. During the Asian session, the euro went down, okay? And then, now, it's jumped back up. During the London market, it's jumped back up. It's rocketed back up, and the reason why is because there was a down cycle during the Asian session. Now we've got an up cycle during the European session. And that happens all the time where you get these cycles. The important thing, of course, as a trader is to be on the right side of them so that we know that we're on the side of the cycle where, the market wants to go instead of the retrace one. If we're trading the retrace cycle, we really want to be careful, obviously. But it's so much easier to see those cycles when you've got the big picture in mind and you're looking at the higher time frames. Another thing that you get when you trade higher time frames, another advantage, and this, of course, would apply to a full-time worker, part-time trader, would be that it's easier to stick to the plan. This is related, of course, to the idea that you're using the planning area of your brain. So if you are a higher time frame trader, such as a daily chart trader, you're going to find it easier to stick to your plan. That's just the name of the game. Because you're using this part of your brain and you're not using the sex, drugs, and rock and roll part of your brain. So, this is something to think about. What it means, guys, is that if you're going to be a scalper, you need to be an exceptional person. And you probably need to get into things like, let me write these up here for you. Probably want to get into things like exercise, like very vigorous exercise every day, or meditation, or hypnosis, which I consider hypnosis and meditation to be the same thing. The reason why I say that is because you've got to clear that mind. And some of the best lower time frame traders, you will find that they're very into meditation or hypnosis, and they're often very good athletes as well. And when I say good athletes, it doesn't mean they're an Olympic athlete or a former Olympic athlete. It just means that they they've got that regimented routine where they go to the gym or they run every other day or whatever. They've got something going on there. It's very, very critical for those people who are training the lower time frames. What you have to do is you've got to get those endorphins from somewhere else, and exercise is one place to get them. So if you can look for get your happy feelings from your exercise, then you won't be looking to get it from your scalping, right? The other thing is, as a scalper, you really need to have a rock-solid trading system so that your rules are in place and you know what to follow, how to follow those rules. So it's really, really important there. Now, because we're not firing off the sex and drugs area, it's easier to stick to our plan. So we've talked about that. Now, the reward for scalping traders is the trading itself, not the financial freedom, not the money, not the nice car, the nice house, all that stuff that comes as we get deep into this and get really good at this stuff, right? That stuff comes later. But in the beginning, when you're trading as a scalper, even when you have that stuff, you still get your major happiness from the sex and drugs area of your brain. Basically, it's an addiction. Now, burnout will also come in because a lot of these traders, and I've seen many of them do this, where what happens is you get into this routine of making tons of money quickly as a scalper, and then you give it back. And that could be psychological, but the other thing is you stop your exercise and meditation, and you start to lose your edge, and that leads to burnout. So it's really important to have a routine. If you're trading lower time frames, it's the kind of thing where it's like I turn it on for 4 hours and then I turn it off. That's the kind of thing where my computer's on for 4 hours while I'm scalping and trading my system, and then I shut it down and I don't even look at my charts. That sort of thing. Because if the charts are always on, they're gonna be very tempting for you, right? Yeah, Manoj is right. And Manoj says, look, the other disadvantage of lower time frames is that the spread is more significant. Yeah, unless you have a really sweetheart deal with your broker or a larger account, you're probably going to have some ugly-looking spreads, which obviously that means you pay more commissions. If I pay 1.5 pips on a 10-pip winner, then I'm basically paying 15% commissions, right? But if I pay a 1.5 pip on a 150 pip winner, I'm paying a lot less. So that's 1% commissions instead of 10. So you have to think of it that way too. It's a good point, Manoj. I'm glad you brought that up. I love swing trading, says Sharon, because the noise I can deal because the noise I can't deal with. Yeah, that's the thing about swing trading is that you don't have to worry about these cycles. These cycles can get in the way for scalpers. Can definitely get in the way for scalpers. So let's just sum it up here. So what are the advantages that we have as a trader who has a job? Well, we're going to use the planning part of our brain. We're going to learn patience. We're going to see the cycles in the market, and we're going to probably find it easier to stick to our plan. Now, if we're trading lower time frames, which is more likely if we're a full-time trader, then we're activating the sex and drugs area of our brain. We're engaging in a highly addictive behavior, and we could burn out rather quickly unless we are very regimented. It's one of those people, you've got to be an exceptional self-starter. A person has very good discipline. And if you're into exercise and meditation, hypnosis, those sorts of things, then what you might find is that you're able to deal with it. But otherwise, you're probably going to have a really difficult time doing that. Are there any questions about any of this? Drew, swing trading is usually like 4-hour daily. That's usually what you're looking at. You usually could be looking at the 4-hour or the daily charts in essence. Yeah. And you know what swing trading is, right? Like this is, swing trading is you're just looking for those swing points. Yeah. So, for example, one chart that would be a nice swing would be, for me, would be if we got a bearish big shadow today on the Aussie. So this would be, to me, this would be a, let me show you. This would be a nice trade. This one right here. If this closes as a bearish big shadow, and the lower the better, this to me would be a nice sell trade off this level where the market reversed here. I could sell it here. That would be I'd be taking off this new high. I'd be saying that this is going to be the turning point. It's going to start trading lower now. And that would be a daily chart trade, obviously. Manpreet, we've had webinars about the cycles. Maybe we will have another one next month. We could do that maybe next month. Yeah, it did on the 4 hour, yeah. Yeah, look at this. Look at this. So the 4 hour, this big long candle right here, it would have been nicer to see a lower close, but it did actually take out this candle and this candle on the Aussie 4 hour chart. Yep. So there you go. Here's another one up here too. This is a nice bearish big shadow. This candle was kind of in the way with this long wick, but obviously it's reversed here a few times. Here, here, and here on the 4 hour. So. You can swing trade on the 1 hour too, but yeah. Okay, so let me show you the charts that I have been trading. So I traded the Euro Kiwi this week, and I was trading off this one right here. It's this buy setup right here. This Kangaroo tail right here. Nice big move up, retracement. It triggered, and then it was in a bit of a drawdown yesterday, but now it's looking like it might come good today, so we'll see. On the Euro Kiwi, we had a very similar setup in reverse, of course, in the New Zealand Swiss. Here you have your Kangaroo tail here, and again, if you're looking at this swing, from this swing high to this swing low, if you pull your fib grid, what you'll find is the same thing you'll find on the other one. It went to about like a 61.8, 50% retracement, depending on whether you're looking at the wick or the body. But it basically did a nice retracement right here, and it fell lower, and it went in a bit of a drawdown yesterday. But now, as long as today ends up closing as a red candle, I'd be pretty happy with that one. So that's another one. I've also got trades on these on the weekly as well, but those were from last week on the New Zealand Swiss and the. No, the New Zealand Swiss didn't trigger. I think it was just the Euro Kiwi. Also, I've got one on the Singapore Yen, and it was this Kangaroo tail right here, right? Stop loss down here. I'm targeting here and here. And that one also hit this wall. I was hoping it would get through, and I thought it got through, and then it came back down. But as long as we get a nice bullish candle here, I think it'll make another run and hopefully break through that level. And then the other one, of course, was the Euro Pound. Now, this one doesn't look so hot. This was a bearish big shadow off this candle. And actually, let me show you the chart that has all the numbers and everything so you can see it. That chart is coming up. Okay, it's this one. So basically what happened here is it came down to this area. And I knew it was probably going to have a little bit of a bounce here. But I still wanted to get greedy and go for here because it was just too close to target here. So if this ends up being a really bullish candle here, I might actually dump it and get out of this trade. But I was waiting for 85.40 and 84.80. So that's my other trade, that one. I think that as long as we get a nice setup on the Aussie tomorrow, or, today's daily candle, if it closes bearish for me, then I'm pretty keen to let me show you. I'm pretty keen to sell this sucker. If it works out. As long as we get this nice bearish candle here, up at where we've seen a reversal here, here, and here, then I'm happy to sell this sucker. I'd sell it down to these lows down here as the first target. and then I would go for 87.50 as a second target. So that would be my setup on the Aussie if it did in fact give us a nice bearish candle today. But we won't know. My charts will close at 5 p.m. New York time, which I think is 10 p.m. GMT for those of you in Europe. So that's the other one, and that's really about it for now. I mentioned the two weekly chart trades that I've got. It's this one and this one. So this weekly one was a kangaroo tail here off this box, and it's a sell down here and here, and that one's in a bit of a retrace. So we really need to see this market start to fall here. But again, the weekly chart has got a way to go. It still has several days before the weekly chart's over. And here's the Euro Kiwi, which was this kangaroo tail right here. It was in traffic, but it's what we call a trendy kangaroo tail. It traded higher last week, and then it was in a drawdown. Now it's starting to come up a little bit this week. So we'll see if we can get back up to close to the entry price. And my targets are 74 and 77.70 on that one. I always move my stop loss to break even once target 1 is hit. So if it gets to 74.40, the stop loss will be moved up here to break even. So those are the weekly ones that I've been talking about as well. But now there's another interesting one on the Euro Aussie. We could get a breakout here. If it breaks out and it trades above this high, trading up here, they could come back down, boom, and bounce off of 44. 1.4390, 1.44 even, right around there. Be a brilliant spot to look for a buy trade. Kind of like this trade here on the CAD yen, where the market hit it, finally broke through, came back down, touched it, and then rocketed back up. So this is a really cool sort of, and you'll see on the line chart, it's like a breakout, came back down to retouch, and it's off to the races. If this ends up being a really nice bullish candle here, I wouldn't have a problem shooting for 99 up here. So that looks really good. But that's what I'm talking about when I say like a breakout and a retouch. That's what I think we might get on the Euro Aussie, but it's still several days from that, probably next week, most likely. Sharon says, I found out that the same patterns are more reliable on the daily and the weekly than the 1 hour and the 4 hour. Yeah, here's the thing. I don't consider the U.S. index when I trade Pan. Here's the thing, Sharon. I think you can trade those 1 hour and 4 hour setups, but your profit targets have to be pretty close to the entry. They're not going to be as far as they would be on a weekly, for example. The other thing is, I found it to be very good to actually how do I say this? If you're trading the 1 hour chart, what I tend to do, and I don't trade it that often, but if I do take the trade in the 1 hour chart, what I'll generally do is make sure I've got a bloody good zone. So, like for example, let's find a good who has a chart that you want to look at? Gold is good. Okay, well, we can use gold. Here's the thing about gold. Gold's right coming up to, I've got a zone drawn here, but probably the best place to draw it is like right here, okay? Right off of where all these lows touched, okay? That's 1356. So if gold gets up to 1356 and gives me a sell signal, I can take it on the 1 hour, but it's got to be off of a really strong level. You know what I mean? I'm not going to take a gold sell if it's not off a strong level if I'm trading the 1 hour chart. You could say the same thing about the pound. Okay, the pound, it came up to a really nice level here. We had resistance here. It paused here. It paused there. We'll see it in the line chart. See a little bend? It paused right there. So it's a nice level here at 53.92. And if we look at the 1 hour chart, would I have traded off of it? Maybe this kangaroo tail, but that didn't really close inside the previous candle. This one didn't really trade low enough. I can trade off these levels. You can see I have two opportunities to take a sell off of it. but really it needs to be a very strong level. Where I tend to get in trouble, or I see other traders do this too, is if we're trading the lower time frames. If we're using a 5-minute chart, we're using 5-minute support and resistance. I don't want to do that. If I'm trading the 1-minute chart, the 5-minute chart, I want to trade off daily support and resistance, right? That's where I want to find my sweet spot. So it's really critical, I think, to keep that in mind. If I'm trading a 1-hour chart, I want to keep in mind that zone that I take a trade off of, it better be rock solid, right? So that I think is one of the tricks to it. Whose question was that? Yeah. So Drew has asked, what's happening with that trade you took at the beginning of the webinar? I'm glad you asked. So here is my trade that I took. Remember what I said? This is the 1-minute chart trade. Boom, right here. And I said it's come down to the support level and I'm going to buy. Now, one of the reasons why I took the trade is because I thought it was a crap one, right? I didn't think it was very good at all. But what you can see what's happened is you've had all these candles since I've taken the trade. And what we see here is that the up moves are retracement moves and the down moves are strong trending. Retracement, strong trending. Retracement, strong trending. So it's probably going to go down and hit the stop, right? It's probably not going to work out. But if I were, and I noticed I didn't watch this trade. We were talking about other stuff. But when this trade went in, I was actually, if I was trading it as a scalper, I would have been watching every single one of these candles here. And I would be going through some wild emotions. One of the things that I didn't mention before about trading and scalping and trading the lower time frames like the 1-minute chart, like this one of the things that happens is that you actually make worse decisions when you've activated that addiction part of your brain. So when we've got the planning area of our brain activated when we're trading a higher time frame, we make better decisions than when we have this pleasure center of our brain activated, which is what happens when we trade the 1-minute charts. So isn't that interesting? So in other words, if I'm trying to make a rational, logical decision while I'm trading the 4-hour chart, it's probably going to be a lot easier than it is if I'm trading this chart. And I probably would make the wrong decision. I haven't really done anything here with this trade, but what I would do if I saw this is I would dump it, right? I wouldn't take it. In fact, what I would probably look for is a sell off 100 up here. I would look for the market to give me a nice sell, a reason to sell right there. Again, the best thing is to find a daily zone, and if we're looking for a daily zone on this chart, the closest one is going to be here. There's one up here of resistance, and down here of support. That would be the closest daily levels right here. So we're like in the middle, in between, not close to either of them. But that's what's up with the 1-minute chart trade. Where is it? Remember, it was just what I said was it just came down here, found some highs to support here. Now, if I was trading this as a scalper, I'd be looking at this going, oh no, what do I do? Oh no, it's up, it's down, it's up, it's up. These wild swings, and I would not be making good decisions at all. It's very difficult when your pleasure center is lit up in your brain to make logical decisions about anything, much less trading. So, Drew, I trade the 4-hour daily and weekly mostly, and then I also trade the 1 hours occasionally. How big is your average stop loss? Mr. C, it doesn't matter to me because I always risk the same amount, the same percentage. So if I have a 250 pip stop loss, it's the same percentage if it's a 50 pip stop loss. But if you look at the euro pound, the stop was up here. So it was about an 80 pip stop, 83 pip stop. And then if you look at the euro kiwi, the stop on this one is from 64.22. $64.22 to here. It's about a 230 pip stop. So it varies quite a bit. Pound Cat 4 hour, let's take a look. Gabriel wants to see it. Let's see, Gabriel, what's going on here. Pound Cat 4 hour. Yeah, could be Head and Shoulders. It looks like, let me go to my 4 hour charts actually. Hold on a second. I'm trying to get into the habit of not messing up my charts and keeping them where they should be. So my 4 hour is right here. Okay, so this is how I see this one, Gabriel. It's a good looking chart. You've got a level here. That was the strong level where you had that kangaroo tail. So that's pretty cool. Is that where you took it? You sold it there, didn't you? Yeah. No, it's a great one. It's a great one. Here's why it's so great. I wish I would have seen it because all of the support here, that was brilliant. Didn't quite get there here, but it did obviously there. Did it trade lower though? That's the question. No, it did not. See, what I like to see is the next candle trade lower. The low is 58.54, and the next candle went as low as 58.55. So it actually didn't trade lower until here, unfortunately. And ideally, mine will trade immediately. Like this one isn't a very good kangaroo tail at all, but see how the next candle traded immediately? So for me, I like to see him go lower immediately, like this one did. This one also not very good because it's in, it's in some traffic. This one's pretty good though. This is one I would have taken. See, assuming it's on a zone, let's just assume that if we go to the left here, we've got a zone. I don't know that we do, but this one's good because see how the next candle traded lower. Now it retraced a bit, but then it fell, and retraced again, and finally went. And a nice target would have been these highs, or these highs. This area, that one's like 156 pips. You've got 86 pips, and then you've got 35 pips. 35, 86, 150. It would have hit all of those, obviously, that one. Yeah, the thing is, they were really small. Yeah, I mean, look, the best kangaroo tail is going to trigger on the very next candle, okay? And if it's tightening up like that, there's not a whole lot of action. You can wait, and I've done that too. I've waited. But for me, the best setup is that kangaroo tail that fires off, and then the next candle just goes, just like this one. To me, like seeing this right here, I would have been really excited about seeing this one right here. I would have been like, yeah, this is good. That I would have been very excited about. Could have been a little bit longer, the tail actually, but yeah, pretty cool. Awesome. I think we're out of time, guys. I use orders. I don't go Rolf. I use orders. Buy stops, sell stops. We can talk about that one in another webinar. I think I found that the win rate goes way up when you do that. I really appreciate your time, guys. I hope that you had got something good out of here, and we'll see you. Thanks, Han. I'm glad you enjoyed it, Pan. Thanks, Han. See you, Canoe. See you, Nick. Take care. Bye, Doherty. Thanks a lot, Doherty. Bye, Stacy. See you, Paul. Bye, Cameron. Take care, Black Cat, Kamikaze. See you later, guys. Bye.